Hello traders, Jason here with SwingHigh.com. It is Thursday, January 21st, 2010, and this is your post-market analysis. Sorry for the fact that the post-market analysis today is so late. Right now it's 5:20 as I'm recording this, but I was on the road and was unable to trade and unable to burn this video. So here we are. We had a huge drop in the markets today, and a very significant drop too, and I'll tell you why in a second. As you can see, this is the SPY daily chart, the S&P 500 tracking ETF. And here we have a rising wedge formation, a very big rising wedge. This goes back to March of 2009. So this support line here, the bottom of the rising wedge, was broken, and very significantly today. So we'll take a look at that. Also, the volume today was quite significant. Very, very big volume on that breakout. So that's definitely a confirmed breakout of this rising wedge. It'll be interesting to see how far we can go down. For me to get really bearish on the markets, I would like to see us break through the 108 area because we're going to have a lot of support between 110 and 108, and we're pretty much sitting at 110 right now. So it'll be interesting to see how far down the S&P can go. Let's go in on a smaller time frame. Oh, I'm sorry, I forgot to talk about the other indexes too. So the NASDAQ did the best today, down only about 1.5%, but still not that great. The S&P down 2%, the Dow down a little over 2%, the financials almost 3% drop. That's bad. And the Russell's almost 2%. So definitely an across-the-board sell-off today, and some significant selling action for sure. So today we opened about flat and just crashed down through our major support areas. For us to remain in the high base, we would have needed to hold the 113 mark on SPY, and you can see why here. It was significant support, but we just shattered that today very hard, significant volume, and then came down here, hit previous support at the 111.50 area, had a nice bear pullback, and then found resistance here between 112.40 and 112, well, not so much here at the 112, we found resistance around 112.40, and then continued to sell off, closed near the lows of the day. That's definitely a significant crash in the markets today. Let's look at the market internals. The VIX was up huge today, up 20%. That, oh my gosh, that is more than enough confirmation on the VIX. A 2% down day, we would have liked to see the VIX pop 6% to confirm that move, but a 20% pop is very significant. We are back well above 20, even above 22 on the VIX, and we were just at around the 17 mark not long ago. So definitely a lot of fear coming back into the markets. The high base formation on the S&P on the daily chart, real quick, is completely shattered. So that is no longer a bullish formation. That is a reversal. So do not or be careful going long here for sure. If anything, I would look for bearish positions and maybe an ETF to short the market or not. Definitely would like to see some continuation to the downside for that. Let's keep looking at the market internals here. The trend, well above 1, well above even 1.5. So a lot of volume flowing into stocks on the decline. Let me take a look at the trend Q as well. The trend Q is actually strangely bullish. Under 0.8 means more volume is flowing into stocks on the rise for the NASDAQ than on the decline. So that's an interesting divergence there. The tick was predominantly bearish, and the tick Q was also bearish. Gold dropped 1.5%, and the dollar was flat today. So just a quick look at those. Not any real big news going on there. Although this looks like a bullish formation, a bullish pennant for the dollar, so I would expect more strength going forward. Thanks for being a part of SwingHigh.com. I'll talk to you tomorrow.